China markets are mixed this morning, with the Shanghai Composite rising almost 1% and the Kospi in South Korea rising over 1% as well. The Nikkei, though in Japan, is down 0.3%. This is the first day of trading for most Asian markets after a long Lunar New Year holiday that, according to official data, saw consumer spending jumping to higher levels than what was registered pre-COVID. Tourism stocks, in particular, are jumping up 2% and still benefiting from a post-pandemic reopening rebound. Shanghai-listed Air China is rising 1.2%. China Southern Airlines is gaining 1.7% right now, while Hong Kong-listed Chinese online tourism services group Tongcheng Travel is rising 1.5%. Finally, the People's Bank of China held a key policy rate that was unchanged, that was expected, but that also comes off the back of a hot inflation report in the US that sparked fears of a delayed rate-cutting program in the US and abroad. For more on this now, let's bring in Han Tan. He is Chief Market Analyst at Xinity Group. Thank you for being with us. Han, Lunar New Year holidays saw a now long-coveted jump in consumer spending in an economy that's ailing. I mean, how good a sign is this for China?
Look, I would quantify it as being a step in the right direction. But if you stack that against the broader macro context, given the headwinds for the Chinese economy, investors and markets and policymakers need to see more, right? So granted, while travel did see a pickup, if you dive deeper into the numbers, though, spending per head was actually somewhat diluted, and perhaps Chinese consumers were still on that hunt for a bargain. So I think overall a step in the right direction, but we need to see more.
Right. We are seeing good momentum as well. In the tourism sector, we are seeing those stocks jumping in the markets today. We know that some 474 million domestic trips were made during the 8-day festival. Is this a result of domestic travel only, or also international travel and international tourism as well, in and out of China?
Yeah, I think, look, like no matter how you split it, right, I think that's still a positive sign, at least net, that there is this uptake in travel, right? And even if you look at, say, Chinese tourists who decided to spend the holidays outside of China, some industry data also show a 70% uptake in how much they were spending outside of China as well. So I think overall the theme here is that there are some encouraging signs that Chinese consumers are willing to spend again. But again, I think these are still very much early days.
You're right. These are good signs, but possibly more is needed to really help the world's second largest economy at this point. The PBOC left rates unchanged. Why, do you think? And what would the Chinese economy need at this point in terms of monetary policy?
Yeah, actually, I'm looking more on the fiscal side, really. So, of course, the economy could do with some stimulus on both the monetary and fiscal policy side. So, given what happened over the weekend, again, it's an encouraging sign. It shows that policymakers are perhaps drip feeding some of the monetary policy stimulus with a cash injection over the weekend and potentially a rate cut further down the line. But, overall, given the well-documented challenges that the Chinese economy is facing with deflation right now, it certainly could use a boost both from the central bank and also from the government.
Right. Deflation being one of the biggest problems right now. Something else that isn't a good sign. We've seen foreign direct investment into China slumping to lowest level in 30 years. I mean, this is the lowest level since 1993. In fact, does this indicate a lack of confidence abroad as well? And how important is it for certain markets in the Chinese economy, for instance, the real estate market?
Yeah, so the short answer is yes, it is a sign of a lack of confidence. And really, given how Chinese stocks have posted consecutive annual declines for the past 2, if not 3 years, really it shows that, foreign investors, their patience is running thin, right? So again, it goes back to what we were discussing earlier. Until they see broad-based support for the Chinese consumer that can keep the economy on a sustainable recovery, I think that's what they're waiting to see, right? But as for the property sector, I think that's more of an onshore thing. So again, it goes back to what policymakers can do specifically in restoring confidence among onshore buyers to really prop up an ailing sector. But given how much they've been burned already, I'm not surprised that given the still stubborn concerns about the property sector in China.
Right. One last point. I do want to ask you a question on the US economy. Obviously, the US economy and the Chinese economy are very much intertwined, right? So this hot inflation report that we saw in the US, what does it mean? What is it indicating about the state of the US economy and also the global economy when it comes to the US embarking onto its own rate cutting program?
Yeah, so I think what has been surprising about the US economy and US inflation and even US jobs is the resilience, right, of these data and of the economy as a whole. So that's taken even the Fed by surprise, certainly taken markets by surprise, and it's forced markets to readjust their expectations for that first Fed rate cut in this cycle. Recall coming into this year, markets were very confident that rate cut could happen in March. Now those bets have been pushed back to June of this year. What does that mean for the rest of the world? It means that, well, it could mean that these other central banks, including the PBOC, that are perhaps waiting and watching and getting their cues from the Fed, they too, in turn, might be forced to delay their own plans to support their respective economies in light of this still stubborn inflation in the US.
Han Tan, great having you on the program. Thank you very much for your time.
Thanks for having me.
And now a quick look at some of the other top stories from around the world. Microsoft-backed OpenAI has reportedly completed a deal that values the company at least $80 billion. The artificial intelligence company has nearly tripled its valuation in less than 10 months. Under the deal, the company would sell existing shares in a tender offer where employees can cash out their shares in the company. OpenAI is now one of the world's most valuable tech startups. China has agreed to lift a ban on Spanish beef imports. Since 2000, Beijing has imposed a ban on EU beef products, citing several cases of mad cow disease in members of the bloc. The decision comes as farmers in Spain have been taking part in EU-wide protests over heavy regulations and high costs. China's first domestically produced airliner, the C919, made its international debut at the Singapore Air Show. This showcases the nation's heavy investment in breaking the duopoly of the dominant Western playmakers in the global passenger market. This significant milestone marks China's ambitious stride towards competing in the global aviation industry. Istanbul Airport topped the list as Europe's busiest in January, with daily flights averaging more than 1,300. The high traffic volume underscores its importance as a major European travel hub.